Welcome back to the Dividend Diplomats YouTube channel, everybody. You got Bert here and Lanny. We are the Dividend Diplomats, and we have a very exciting video to bring you today. Election season is upon us. We're not here to talk about Democrats. We're not here to talk to you about Republicans. We are here to talk to you about 3 dividend stocks that are going to perform well regardless of whoever is president.
And we're also here to tell you to smash that subscribe button, give Bert and I a thumbs up, turn it blue, vote for the Diplomats. That's where we want you to cast that ballot on these 2 dividend investors. And yeah, Bert's right. We're here to talk to you about 3 dividend stocks to buy or consider adding to your watch list before, during, and post the national election.
Yeah, because think about this, everybody. We invest in long-term dividend growth stocks. We focus on dividend stocks that have increased their dividend for many years. We love dividend aristocrats that have increased their dividends for 25 plus consecutive years. We love dividend kings that have increased for 50 consecutive years. And as you know, a president can serve up to 8 years. So we really focus on companies that can transcend economic cycles, presidential cycles, and bring you increasing dividends over the long haul.
Now, the presidential election has caused significant volatility in the stock market. The number of swings we have had leading into this election day has been insane. The market has skyrocketed up after the pandemic of COVID-19, but over the last week or so, we have seen the stock market plummet due to the scare of the second surge of the COVID-19, as well as the concern of what's going to happen during the election, the looters.
Yes, and while it's crazy, and those are some of the extreme scenarios we happen, the reality is we want to focus on those high-quality companies that will perform well after.
So there are 3 dividend stocks to buy that we think are strong and well-suited to perform post this election. There are 3 different industries, and you'll see that the industries that we focused on are those that are going to just literally be heavily involved post this election.
Yep. So let's dive right in. All of these companies have strong dividend histories, are pretty well diversified, and we are very excited to bring this list to you. So Lanny, I think you should do the honors and start this one off with dividend stock number 1.
Well, first, we always use the Dividend Diplomats stock screener.
That's right. How could I forget to tell you guys about the Dividend Diplomats dividend
Is he even a diplomat anymore over here?
Yeah, I'm acting like this is my first YouTube video. I've done...
Newbie.
Yeah, noob. Just put it right across the chest right here. Sorry, everybody. But yeah, we should tell you about how we find these dividend stocks that we invest in. Metric number 1, PE ratio less than the S&P 500.
And then the dividend metric number 2 is the dividend payout ratio. And we like that perfect payout ratio of between 40 and 60%. And again, to calculate the payout ratio, you take that dividends per year and you calculate that over that earnings per share or forward earnings per share.
And that last metric is good old dividend growth. Good, sweet dividend growth. We like to focus on companies that have increased their dividend and demonstrated their ability to do so over time. I already talked about that in this video. And then the other component of that is the dividend growth rate. We like to see our income increase. We don't just like a dividend that's going to lose purchasing power over time. We want to see that dividend increase so that your income grows, it beats inflation, and your cash continues to get value.
You know, we'll talk a little bit about the dividend yield with these 3 dividend stocks, but, not too much of a focus because we want to make sure that they pass the Dividend Diplomat test over here.
Yeah, and that's an important point because dividend yield should not drive your investing decision as a dividend investor. The quality of the dividend should be first, dividend yield should be secondary.
So you're here and you want to know, as an investor or as a soon-to-be investor, what are 3 dividend stocks to buy, or what are some stocks to buy given the uncertainty of what could happen with the election and the election results? Again, that's where Bert and I came into play. We went through the stock list, we went through the stock screener, we showed how we screen stocks in a previous video back when we first started here, and we found 3 damn good dividend stocks that we want to talk to you guys about.
Yeah, and we are very excited, as always, to talk to you about dividend investing and dividend stocks. And we truly believe whoever wins the election, these stocks are still going to perform well and set you up for success in a growing dividend income stream.
That first dividend stock we're here to talk about could be one of our favorites. In fact, they are a top 5 foundation stock for your portfolio. Good old reliable Johnson & Johnson J&J.
We love this company on this blog, and we love it in our portfolios. We love it in your portfolios. We love it everywhere because this is one of the best stocks that we have found. And we even did a video about why we think Johnson & Johnson is the best dividend stock.
Arguably, they could be the best dividend stock to buy and to own for life. And the last week, of October 26th, again, here we are recording this on the last day of October, and their stock price has plummeted. Their stock price is now at $137 per share. And that has pushed down valuation metrics for them, and they are showing some strong signs of being undervalued. And what better industry than the pharmaceutical healthcare industry? And Johnson & Johnson has also been partaking in that COVID-19 vaccine.
And that's huge. Unlocking the vaccine and helping people get through this crisis is paramount first, but then also with the race to the vaccine, if Johnson & Johnson prevails once they get their solution, that's going to be a huge revenue and income generator for the company.
And Bert, what are some great products that J&J also has?
This is why we love this company. Tylenol, Zyrtec, Motrin, Benadryl, others, Bengay as well. There are just so many great brands that you can find in every person's medicine cabinet in their household. I'm sure we could walk around Lanny's house here and find a bunch of them. We could walk around my house. We can find a lot of their products in my daughter's room, and every day. It's just awesome.
So you're here to see why J&J again is on the list for stocks to buy during this election time period. And we'll start with the dividend metrics, the price to earnings ratio. J&J, based on forward projections of about $9 per share at a share price of $137, shows a price to earnings ratio of just over 15.
Yeah, that's way below the market, which has been trading around 30 times. We'll put the current PE ratio for the market there. But regardless of the final exact number, Johnson & Johnson is trading at a severe discount to the broader market.
And here's the second metric, the dividend payout ratio. Where does J&J stand, Bert?
Calculating with their dividend and that EPS, it's perfect. We have a 45% dividend payout ratio there. That's the perfect blend of reinvesting your earnings back into the business, but also paying shareholders a nice, solid, growing dividend.
The perfect payout ratio. That's such a sweet spot. The safety of the dividend is there at a, see, we already talked about the price to earnings being just over 15. The dividend payout ratio in that mid 40% range. I mean, can it get better?
It can, because their dividend growth history, they are not a dividend aristocrat. They are a dividend king. They have increased their dividend for 57 consecutive years. Unbelievable, Johnson & Johnson. And that dividend growth rate, very strong as well. It's very reliable, hence good old reliable. In April, they announced a, what was it,
6% plus dividend increase back in April. And I mean, you couple that with the current dividend yield of almost 3%. You get an almost 3% dividend payment right now. You're getting a dividend growth rate of just over 6%, usually in that 6 to 7% range, undervalued, and their safety in the dividend payout.
Mwah.
Yeah, that's called a LeBron slam dunk right there.
Yeah, get the Sosa out of the...
He's giving Sammy a shout out.
Yeah, so all right, I mean, it makes sense. Regardless of what happens on the election, Johnson & Johnson is undervalued, a stock to buy. And Democrat, Republican, we're going to be watching Johnson & Johnson over the next few weeks.
So dividend stock number 2, we're diving into our favorite industry. I currently work in that industry. Bert is in I guess a quasi-industry.
Yeah, in the fintechy area of it.
Yeah.
But you both have strong backgrounds in this sector.
Banking. And what better second dividend stock than JP Morgan? Ticker symbol JPM. We got to give a shout out to Jamie Dimon over there doing great things. So banking is going to do so well, I believe, because why? That stimulus package more than likely is going to get passed after the election, and that's where banking gets heavily involved with the small business lending, The PPP as well as any economic stimulus has to get deposited somewhere, and JP Morgan will use that to make investments to earn something on that.
Yeah, and that's the funny thing about the banking sector right now. It is flushed with cash, and these deposit accounts, all this extra money are causing very bloated balance sheets, and banks and credit unions alike are looking for ways to invest that capital. And with that potential second round of stimulus coming, with more cash being injected into the system, we don't know what the final package is going to look like. Not very many people do, and I'm sure the news will continue to change with that after the election. But the banking sector is going to be right in the middle of it, just like they were last time, as Lanny pointed out.
So JP Morgan, starting off with the price to earnings ratio, again, trading at just under $100 with analyst expectations of around $9 per share. You're looking at a price to earnings below 11 times forward earnings. This is where the banking industry kind of is right now across the board in that 9 to 12 range. So they are, very, comparable in the industry, but undervalued against the total market.
Yeah, and just like J&J, they have that perfect dividend payout ratio. It's
Woo!
Ric Flair's entering the arena here. Their payout ratio is just a hair over 40%. So they're on the low end. But in the banking sector, I know dividends are a little restricted right now with what you can offer, but they still have plenty of room to increase their dividend if they choose.
Yeah, again, another perfect dividend payout ratio. And then when you think about JP Morgan right now, they may not be able to increase their dividend because of what the Fed has said, but given that their total annual payout in 2020 is going to be bigger than the overall payout in 2019, it still counts as a dividend growth year. Yeah. So we're talking about that dividend growth as the third metric. And they currently have over 9+ consecutive years of dividend growth, obviously post the financial crisis. And where does that average dividend growth rate over the last 5 years, Bert?
Just under 17%. So, clearly flushed with cash. They are a well-capitalized institution. They have money to return to shareholders. And as we've mentioned, there are restrictions on their dividend today. But the minute the Fed lifts those restrictions and they pass their stress test, that dividend is going to shoot up because they have to put the cash has to go somewhere.
Obviously with that, the share price, has stayed relatively flat, which has given the yield time to come back up a little bit. And it's now yielding 3.67%.
Very strong.
Very strong.
Great dividend yield.
2 times plus over the S&P 500. So again, you're getting a nice cash payment, as well as you're invested into this stock. JP Morgan doing plans to do well post this election. Again, another industry that, is a great industry to invest in a post-pandemic world.
Yeah, that's absolutely right, Lanny. So, it's a great play. Let us know, too, what you think of JP Morgan and some of the other banks in the comment section as well.
One of Bert's favorite comments is to be the man, you got to beat the man. Woo!
I do say that every day.
So now let's talk about dividend stock number 3. Time to bring it home. And man, we're going to slide into the tech sector here. And no, we're not talking about the Thong Song Cisco systems for Bert. Nor are we talking about Apple, Tesla, or Netflix. We are going to get away from those tech stocks. And in fact, we're talking about the one that you're probably using at work, at home, maybe with family. What third dividend stock is this, Bert?
Microsoft, ticker symbol MSFT. And why are we picking Microsoft? Because the reality is, I don't think work from home is going anywhere anytime soon, especially as we enter the winter time and coronavirus cases continue to increase. And that's where we really saw Microsoft's first boom that came in the pandemic as well. As companies switched, they became fully ingrained in the Microsoft Office suite. You have, as Lanny said, all your Microsoft products. You have Teams, you have SharePoint, and OneDrive. Whenever you move to a remote-capable place,
Office 365.
Yeah, Microsoft's there to benefit from you. And let's be honest, they're one of the largest tech companies. They know how to take advantage. They're ingrained in every corporation. So I think regardless of who's president, Microsoft is going to play a major role in companies over the next year.
What's their price to earnings look like, Bert?
They're going to be the most expensive company on those lists. Their PE ratio is 30, so just a hair below the market, but
a hair below our age.
Yeah, I had to think about that one for some reason, but you're absolutely right, Lanny. But their price has just taken off in 2020, and even though they just had their earnings release and the price came down a little bit, some numbers weren't as strong as they were. They're better than they were a year ago, and they're going to continue to be better going forward.
Now, even though they've gone up in price, I mean, but how does the safety in the dividend look like with that payout ratio?
Yeah, that's a very fair point. Their payout ratio is 33%. So great, not perfect. This indicates they have room to increase their dividend if they wanted to. But we're very happy with a 33% payout ratio because it's below our 60% threshold we use in our stock screener.
Safety.
Yep, I can sleep at night with a dividend from Microsoft.
You know, they're really starting that journey towards being a dividend aristocrat. They're, more than halfway there at 14 plus years of consistent consecutive dividend increases. And I mean, the 5-year average is also amazing. So Bert, what is that 5-year average dividend growth rate?
Yeah, it is 10.5%, very solid, and they just announced a 9.8% dividend increase, so right in line with their average. Consistency, Microsoft continues to deliver a nice increasing dividend for their shareholders. Now, the one caveat is the dividend's increasing, and it needs to increase because it doesn't have a very high dividend yield. So they're a very low yielding company with a high dividend growth rate. What is their current dividend yield, Lanny?
Just over 1% at around 1.1, 1.11%. And again, with the price appreciation, when stock price goes this way, dividend yield goes down. It's inversely related. And in order to keep the yield with pace, with the stock price and earnings growth, you need to increase that dividend. So Microsoft just hasn't been able to increase that dividend fast enough to pace with earnings growth.
Guess that's a good problem to have.
Right. So yes, Microsoft, a tech stock that's going to do well with all the products and services. And Bert and I just talked to you about 3 dividend stocks to buy and stocks to consider, to invest in, add them to your watch list. 3 different industries, which are?
They are the healthcare sector, banking sector, and technology sector. So again, I mentioned earlier JP Morgan. Let us know what you think of these 3 companies. We didn't pick all the companies in the sector, so let us know how you think they're doing in the sector and what companies you would invest in and what are you watching in the sectors today.
Again, this is 3 dividend stocks to buy. Please let us know what you think of our stocks to buy post-election and during this election time period. If you haven't already, subscribe to our channel. Give us a thumbs up if you enjoy watching Bert and I and recording these Dividend Diplomat investing videos for you. Good luck this week. Regardless of who wins, you must take care of your investment portfolio, and we're going to keep bringing you content to help with that.
Yeah.
This is Bert and Laney from the Dividend Diplomats.
Over and out.